Today, we would like to introduce one of the oil and gas stocks that is listed on Bursa Securities Malaysia Berhad, called T7 Global Berhad. This corporate video is produced in collaboration with 12 Invest. The stock code for T7 Global is 7228, and the company is classified under the energy sector on the main market of Bursa Securities. T7 Global is an international oil field engineering service provider based in Malaysia with more than 30 years of track record, operating in the oil and gas industry. The company commenced its business since 1990 and has been successfully listed on Bursa Malaysia since 2005. T7 Global has grown organically over the years. The company has strengthened its position in the industry through strategic acquisitions and forming smart partnerships with other oil and gas service providers. T7 Global has also diversified into aerospace and construction sectors to derive additional income stream for the company. Currently, the three core business divisions of the company cover energy, aerospace, and construction sectors. Under the energy sector, the core business of T7 Global is mainly focusing on oil and gas industry. The company is able to provide various types of engineering services and solutions to support oil-producing companies. Among the diversified types of services that are provided by the company are engineering, procurement, construction, installation and commissioning, operations and maintenance, wells and decommissioning, underwater and subsea services, specialist product and engineered solutions, and professional manpower supply. As a quick preview of the past 5 years' financial performance, T7 Global revenue has grown at a compounded annual growth rate of 40% per annum for the past 4 years, from Ringgit 60.7 million in financial year 2015 to Ringgit 232.2 million in financial year 2019. After recovering from the losses experienced in financial year 2015, the profit after tax of the company has grown at compounded annual growth rate of 36% per annum for the past 3 years, from Ringgit 5.1 million in financial year 2016 to Ringgit 12.4 million in financial year 2019. In the past 12 months, T7 Global has been awarded multiple oil and gas related contracts from various oil-producing companies, such as Petronas, Shell, Repsol, Mubadala Petroleum, Westigo Petroleum, and others. The outstanding order book is Ringgit 1.7 billion and the tender book is Ringgit 2 billion as at 1st February 2020. The future revenue of the company is well supported by various long-term supply, maintenance, and service contracts secured by the company. Now, there are a couple of questions that we would like to ask the senior management team of T7 Global in this video clip. Question number 1. With the unexpected sharp plunge in crude oil prices from US $50 to US $60 per barrel since early March 2020 to around US $25 to US $30 per barrel lately, what are the challenges expected to be faced by T7 Global in the short term?
Thanks for choosing T7 Global for the short discussion today. I hope after this, investor will have more insight about us and most importantly have the outlook for the industry in T7 eyes. With the plunge of the crude oil price recently, we know that the immediate direct impact will be on the oil producer. These are companies like Petronas, Shell, ExxonMobil, and many others. So during the low oil price period, we know that oil producers like them would not have any urgency to spend or carry out any greenfield projects. However, we know that brownfield project will still be ongoing to sustain their oil production. PAC will need to keep a minimum level of production or operation, as it will be very costly for them to shut down completely and also only to resume it later when the oil price is better. This will incur a lot more cost for them. Therefore, we see service provider like us, T7, will still be required and needed, and we will continue to show our support to our client the best we can. Further to that, I would like to highlight the contracts, or all our order books are majority long-term contracts, 3 to 5 year minimum. This will keep us busy and ongoing for the next 5 years. To top that off, we have recently secured the 10 years contract from Petronas. This is for building, leasing, operating of mobile offshore production unit, in short, MOPU. This contract will further enhance our top line, and once the completed construction and start its operation, the MOPU will be located in Sarawak waters, and it will take us roughly 2 years to build. After that, we are responsible to operate and maintain the MOPU for the next 10 years for Petronas. In summary, we believe with all this in-hand order book we have, we will still be in business for the next 5 to 6 years without any significant impact.
Question number 2. Assuming the crude oil prices are able to recover to $50 to $60 per barrel again, what is the expected long-term impact to the company?
When the crude oil price really do rebound back to $50 and $60 per barrel, all the projects supposed to be rolled out by the PAC will be continued as per their plan. T7 being one of the pioneers in the industry, definitely our future is bright.
Question number 3. What kind of opportunities can T7 Global capitalize from the unexpected downturn in the oil and gas industry due to the sharp plunge in crude oil prices globally?
Pertaining to the unexpected downturn in oil and gas industry, we strive to always offer the most cost-effective solution to our clients. With the earlier oil price plunge during 2013 and 2014, oil producers nowadays are very mindful of cost control, and coincidentally, T7 has also adapted that approach. For example, we ventured into subsea and underwater services 2 years ago. Instead of offering the traditional conventional methods of using lift boat and a diver, we have performed the same kind of job with using ROV, remotely operated vehicle. This saved our clients cost for more than 50%, and more to say, the risk is also significantly lesser. This is only one of the examples. Over the years, we have also developed with a few smart partnerships with various industry leaders in their respective field to leverage on each other's expertise and skill. Therefore, I'm confident with 30 years experience in the industry, we have the means to adapt to crucial environments like this, and we will always strive for more effective and innovative solutions for clients.
Question number 4. What are the key rationale for T7 Global's venture into the aerospace business since 2018? This new business appears to deviate from the core business of the company in the oil and gas industry.
Definitely can. I can summarize into 3 words: long-term stability. Being an oil and gas company, the industry is always subject to very stringent processes and safety compliances. Safety, in fact, is one of the most important aspects in the industry. This is also very similar in the aerospace industry, where they are very heavily regulated as well. Therefore, we are confident that the transition from oil and gas into aerospace will not be a huge leap for our group. We are well trained in oil and gas industry, which made us easily adaptable to such environment. On top of that, we have not entered into this industry alone. We have chosen Qgo Group from the UK as our technical partner. They hold 50 years experience in the aircraft manufacturing sector and also has presence in major aerospace hubs such as UK and Mexico. In view of the high demand of commercial planes from both Airbus and Boeing, which the orders are able to keep the industry very busy for the next 8 to 10 years without new orders from airlines. Also, with the lack of approved treatment house available in the region, And as the manufacturing jobs we see are piling up in this region, we are confident by us setting up in Malaysia, we are able to fulfill partial of this supply chain gap in the industry. With this, we aim to be one of the leading metal surface treatment companies for the region.
Question number 5. With the spread of the coronavirus pandemic globally, we have begun to see that there is an increasing number of airline companies that are deferring to take deliveries of new airplanes or stopping from ordering new airplanes. How has this unfavorable development affected T7 Global's aerospace business lately?
This is a very challenging question, but however, let me try my best to answer you. COVID-19, in my opinion, will hit us short to mid-term impact. And this will hit all industry and not just aerospace. We start to see news regarding potential deferment or even cancellation of planes due to undercapacity of their airlines operations. However, we can safely say that all aircraft manufacturers will not be anticipating any large purchase order for them in the short term. However, the long-term outlook for the industry should remain positive. This is in view of the huge quantity of airplanes yet to be built and delivered by both Airbus and Boeing to their customers. We hope our stakeholders are willing to spend some time to learn and understand that airplane manufacturing is a highly stringent and complicated process. Typically from the drawing board until the delivery of a new plane, it could take an average of 24 months or more. This is very dependent on the different requirements by different airlines, different clients. Within the aerospace supply chain as well, there are multi-tiers players involved, from the smaller parts, subcomponents, hinges, brackets, fan cowls, etc., which will be assembled into the largest components such as wings, engines, nacelles. This is a very consuming process since most of the time the supply chain for aerospace is stretched out all around the globe. Then only aircraft manufacturers such as Airbus and Boeing could assemble into the complete plane. Historically also, once any epidemic or pandemic is over, anyone who is involved in FMCG, fast-moving consumer goods, these industries could quickly ramp up their production within weeks and months to meet the customers' demands. However, this will not be the same case for aerospace. There is no possible way any aircraft manufacturers will be able to ramp up their production to meet the customers' demand, while also meeting all the aerospace safety standards set by the authorities. To strengthen my point, we see the outlook order backlog of almost 7,000 planes for Airbus in 2019, where they're only able to deliver 860 planes to the customer into last year. Boeing have about 5,000 backlog of orders and only able to deliver about 380 planes last year. So to summarize, the combined book order for commercial planes only is about 13,000 units. And the world manufacturing supply chain can only deliver 10% of that annually. So even with no new airlines order, it would take Boeing and Airbus 8 to 10 years to complete all the delivery. I would like to highlight that our factory is now fully certified and approved by major aerospace players. We are fully operational as of December 2019, and we are confident that once this issue, COVID-19, is resolved, our factory will be hitting maximum capacity in no time.
Question number 6. What are the contingency plans by the company to mitigate the unexpected slowdown of aerospace industry in 2020?
I would like to highlight that our facility is fully automated with very flexible configuration, in which we can serve other high technology industry as well. Our treatment facilities are capable to serve industry outside of aerospace. These industries such as semiconductors, automotive, electronics, or even medical. The treatment process for them are essentially the same with the aerospace, but with less stringent requirements. So I would like to conclude that there won't be any issue for us to tap into any of those industries in the near future.
Question number 7. Assuming the energy market is able to return to normalized condition where the crude oil prices are able to recover to $50 to $60 per barrel, what would be the likely performance of the company in 2020?
I'm Boon Leng, the Corporate Affairs Manager of T7 Global Berhad. So this is a dollar and cent challenging question. So to answer your question, T7 has an outstanding order book of approximately 1.7 billion ringgit as of February 2020. If you can see from our past 3 years financial performance, 2017, 2018 and 2019, we have achieved more than 200 million revenue each year. This also proves that our business and financial performance has been growing. So if with 1.7 billion order book, 250 million ringgit revenue can be achieved each year, this can last us for minimum 6 to 7 years without any new contract coming in. So if the oil price bounce back to normal, we foresee business will go back to as usual and also more projects to be rolled out by the oil producers. Ultimately, we will see continuously growing trend for T7. This will definitely boost our financial performance and also business for 2020 and also the future years.
Question number 8. In the event that the recession materializes in 2020, how ready is T7 Global to weather through the storm and pull through the recession?
Nobody ever wanted recession to happen, but it does happen in life. So the real question here is, are we ready for it or not? As I mentioned earlier, our order book can last us minimum 6 to 7 years. We do not foresee any significant impact for us in this short to medium term period, as our jobs still need to be carried out to sustain the oil production for the oil producers. Besides this, you can see we have a very good balance sheet and financial position. Our current ratio is about 3 times. It means that we can serve all our financial obligations without any problem. We are also at a marginal net debt position of about 1%. We will not face any financial difficulty if bank wish to recall all of our borrowings and loans. We will be able to repay all our debts with our own cash. For the past 2 to 3 years, the management has built up the balance sheet and shareholders fund before 2020 to embrace for difficult situation like this. In just 4 years, our total equity has grew from 120 million in 2015 to close to 200 million in 2019. This is also to preserve our borrowing capacity when we need financing for new projects that require intensive capital expenditure. As you can see from our cash flow statement 2019, the negative operating cash flow is very common when our business has been ramping up due to change in working capital in 2019. Moving forward, the operating cash flow will turn back to positive upon collection of the receivables. We also anticipate that our investing cash flow will be negative from now till 2022 due to extensive capital expenditure that we need for our mobile project and other investment required for us to sustain our business. We know that we need to invest 100 to 200 million constantly per year for the next 2 years until the construction of the mobile is completed. As a result, there will be temporary shortfall of cash flow, and we are borrowing to finance the job. We do not foresee any difficulty to get financing due to our strong financial position and also good customer and good paymaster like Petronas. Besides this, back to back, if we require to raise additional financing for other needs, we are also able to seek for equity financing via new shares. For example, we have announced for new private placement of 10% in February 2020 to finance some of our current projects. Out of the 10%, more than 6% has already been placed out, and the remaining will be placed out when the time is right. As a conclusion, we are more than ready than before. We know that we can embrace through this weather as we have already been well positioned before the year of 2020.
Thank you for taking your time to watch T7 Global's corporate video. If you like this video, please remember to share with your friends who wish to obtain the latest updates from the company's management team and click the thumbs up icon under this video. If you wish to pursue more information on T7 Global, please do follow our Facebook page 12invest linked below.